So hi guys, welcome back to another episode of the technical breakdowns. So I personally have not been doing the breakdowns. I think for the last 3 or 4 episodes that we've had, Caleb has been taking you through, primarily because I've been occupied with other things within the company. But now I'm back. I'll be sharing with you my ideas of where markets are headed. I'm also planning to come back and share with you via writing some of the things that I'm looking at, where I'm looking at them, how I think they'll affect markets, just different opinions and different things that are affecting the market. So today's on Monday. It's about 45 minutes, an hour and 45 actually into London Open. Markets have opened quite strongly. We've seen some moves to the upside. I think this is one of the most volatile periods also of trading. I think between in my personal experience, between 2020 and 2022, it's been very, very volatile. On average, the VIX has been at 30. During high periods, it could go to as high as 50. During low periods, could come to about 24, 25. On average, we normally have a VIX of 12 to 18 and 30 during the volatile period. So these 2 years, due to the different policies that have been applied in the financial markets, we've seen different things happening in the market. So today I'm going to share with you my different opinions on what is going on in the market, what I think is likely to happen for this week. Obviously, when the facts will change, I will also change my mind. That means that anytime that I spot something that indicates that maybe my idea of where the market is headed is wrong, then I'll change my opinion. I'm not really fixated on trying to be right about where markets are going or trying to predict. I'm just flowing with the markets and executing my setups along the way. So that's what I'm going to share with you today. So I have a couple of markets that I normally watch on a day-to-day basis, starting with gold. And if I just move along, you'll see other markets that I'm also watching. So let me just start off first of all by looking at gold. So just a bit. This is now gold. So I've opened the gold chart. And I'll start from the weekly chart. I think there's something going on in this market from the big picture perspective that you should pay attention to. So gold is now officially in a bear market. We saw the break of 1700, which happened sometime about a month ago, and the markets went down to 1650. We saw a retest of the major level 1700, and last week we got a very bearish close, suggesting that gold prices are likely to still keep moving lower. What I expect coming into this week is we'll still see lower prices on the commodity. I think we're likely to visit 1600, 1550. As rates are going higher, as the yield curve is pricing in a higher rate curve, a higher rate hike, a higher rate price, we are likely to see gold shedding off some gains. So we've seen a collapse from about 2000. Now we're at 1650. On the daily chart, I have this beautiful channel formation which suggests that we could easily see 1600. And if 1600 is taken out, I think we could easily visit the 1650 level. On the 4-hour chart, I think it's right for you to time an entry around the 1667 level, 1668 level. I think that's where markets are likely to go. Before they start, they move lower to 1625 and probably 1600 before the week ends. So on gold, I'm quite bearish. I've not seen any signal whatsoever that suggests I should be bullish on this market, nor have I seen any fundamental risk that is likely to change how these markets are moving for the week. So at least for now, I'm very bearish. I'm waiting for a clear move to the downside. That's on gold. If I move on, I'll go to oil. So on oil, I was a bit bullish, but now things seem to be changing again. So oil last week, but one, not last week but one, we had OPEC come out and clearly say that they are likely to cut production by about 2 million barrels per day. That resulted in oil prices jumping from about $80 a barrel to trade as high as $92.5 a barrel on US oil specifically. I'm sure Brent oil was something different, but the movement was more or less the same. Then last week we had a collapse from 92.5, taking back markets to as low as 87. Now the question was, will the trend continue to the downside? Because oil had started moving to the downside from as high as 120 to trade as low as 80. I think in this commodity you must be prepared for political wars or rather geopolitical tensions between two different countries. For example, right now we still have this tension between Russia, Saudi Arabia and the US. The US is accusing Saudi Arabia of trying to coerce other OPEC plus members to cut production. Saudi Arabia has actually been in talks with Russia, so there's a lot of darkness going on between these two things. There isn't that much clarity to clearly say what's going on. So you really have to keep that risk within you as you're trading these markets. So you could easily hear some news released and it could change the direction, or you could easily hear another news and the direction again will change. So like right now, I think from the weekly perspective, you can see we got a bearish close last week after markets went higher. On the daily, we had gotten a correction, which is sort of a normal pattern that I personally have observed over markets for quite some time. So we rejected 92.5, came back to around 87.5, 85. But now I think it's a bit fishy. The question is, will we get support at 85 to push these markets towards 95, 96? Or will we break 95 and we will see a straight collapse, probably back all the way to the $70 a barrel? If you also go by the Dow theory, you could see clearly that this was the last high that this market had obeyed, the last previous high, and it looks like we have formed another high, which is lower than the previous one. So the question is, will this high be strong enough to sustain momentum to the downside? If that's the case, then you could easily see markets coming back to the S2 level or the lower levels in this market. On the 4-hour time frame, I actually was long last week, and this is one of the losing positions I had for last week. So I had two positions, one was a winner, one was a loser. It still means I was up in general, but you can see clearly this setup, I was looking for these markets to go higher. You can see we had a move higher before a collapse to the downside. Now it looks like we've opened actually towards the S1 level, so we could see a correction back to fair value before continuation to the downside. That's dependent on very many different factors. So if I was to just remove this and remove this trend line now, since it's nullified, then you really have to ask your question, are markets now moving towards some bearish sentiment, and if so, how bearish can we be? So the question is, will we get some good support at the 87.5 central pivot level? And if we do, will momentum be enough to sustain the markets to come back to 82.5? Or the flip side will happen, whereby markets will have an explosive move to the upside, breaking past the central pivot. For me right now, I'm quite out on this market. Once I don't have clear picture on where something is going, or I don't have a clear reason to participate in the market, then at least I'll try and stay out until there's something that is quite interesting to me. So for this market, off now for a bit. The next market that I look at is the Dow. So the Dow has been in a bearish market now from around January. We've had high interest rates pushing these stocks down. We've had liquidity drying up. Inflation is still relatively high. We're still at 8.3. The yield curve is at 4.5. If you think about all these things from a fundamental perspective, technically these markets still have some downside. I still think though that markets are quite cheap relative to where they normally trade, and these are also attractive opportunities for contrarians and people who normally buy billions and don't try to time markets. This could be very cheap prices for them. So that factor is also factored into my decision making. However, the last 2 weeks we can see clearly that markets have failed to go above 30,000. And if markets don't close above 30,000, I think there's a high chance we will see a straight collapse to 27,500. In fact, the ABCD pattern that was formed by this retracement back to fair value is not yet complete. So if I just extrapolate, you can see that it's calling for this market to come back to the S3 level, which is 27,230. That's where markets are pricing in a collapse to those levels. If I just go to the daily chart, you'll see that last week we sort of had some consolidation with some bullish pressure coming on Thursday, then some bearish pressure coming on Friday. So it's quite hard to pinpoint where these markets are going. But like you've seen on my chart, at least if we're below 30,000, I remain short. So I think there's a high chance these markets will keep collapsing if we were to go by the price action. I think forget your opinion, because if I try to say it's bullish, I'll be leaning more on my opinion rather than what is happening on the chart. I think on the chart it's quite clear. On Friday we had a very good bearish close, which was the third bounce at 30,000 level, which was fair value. And now we're looking for a move back all the way to about 27,600. On the 4-hour chart, we could also go in line with the third bounce that I was pinpointing. And you can see clearly I'm also looking for a move from about 30,000 to send this market lower to about 28,500. However, I'm still not in this trade. I'm waiting for the New York session. I like timing my entries in line with the sessions. I've learned that over the years that it's very good to try and time your entries when others are not, or when others are not really in the market. So I'm not very quick. I don't have FOMO that much when I'm trading. I just have clear rules and clear specific guidelines that I follow to ensure I'm in the market and I'm out of the market at the right time. So I'm still waiting for New York session on this one to come in short, expecting a collapse to 28,500 this week and probably a continuation to 27,500 next week if I'm right on the direction of this market. I don't think there's any signal of the trend changing yet. Next, I'll look at the pound. So the pound has been having volatile moves to the upside and to the downside. Part of the reason for that is obviously the policies that are going on in the UK. If you are tracking what's going on in the UK, you'll know that the UK is currently in trouble. They have very many problems, including very high inflation, and at the same time they have easy monetary policy. So easy monetary policy is basically you're pumping liquidity into the system instead of removing liquidity from the system. Across the board, to combat inflation, you have to remove liquidity in the system, and the UK was forced to go into doing the opposite of what it should be doing. On Friday, though, the central bank said that it's going to stop the bond buying program, and the pound collapsed from about 1.1375 to trade as low as again 1.12 something. Then today on Monday we had a gap open to the upside. Today 11 p.m. we're waiting for the Prime Minister to clearly lay out his fiscal policies ideas, what he's planning to do to try and revive the UK economy. But at least we're sure the central banks have decided, one, they're not going to continue the bond buying program, and two, they're going to hike rates at least to fight inflation. Now, with all that said, let's come back to the technicals and see technically what the market is doing besides the fundamentals, because as much as the fundamentals are confused, the price can tell us relatively what is expected in the market. Now, if you look at the price, the last 2 weeks, quite indecisive. Obviously, we tried going up the first week, had a significant close on the downside. And the second week, the same happened. We had a significant close to the downside. Nothing much from a pattern perspective there. But if you come to the daily chart, you'll see quite clearly that we had this sort of a move to the downside. We then had this move to the upside. We then had a move below fair value. We then had a move towards this quarter level. Then on Friday we had this close. So we could say that we are trading at around the fair value area with a move expected on either sides depending on the policies. So this is also a quite risky trade. But on the 4-hour time frame, for me, I've discovered there's a pattern here that is quite evident. So we have the first bounce, we have gotten the second bounce, and now it looks like we've gotten the third bounce off the trend line. And on Friday we had this first initial move to the downside. We've now gotten this gap up open, which suggested a move to 1.125 quarter level. If we get a good close around this level, which is what I'm seeing we're getting, which means we're still trading around that level, but we're really struggling to have a good close above the level, we could easily see a move to 1.0875, which is the next downside target. So for me, I'm waiting for these markets to at least, let's see what will happen at 11, and let's see today's close. But if we get a move to the downside, I think I'm more inclined to be bearish than bullish. I think the UK is in trouble, and I think their currency won't be an exception, especially trading relative to the dollar. So I think the dollar is quite in good shape. The dollar has been moving higher. I still think we're in a bullish trend on the dollar. Rates are still going up. So the US seems to have figured itself out, unlike the pound, which is still struggling with which policies to follow. There isn't much of stability around the UK. That's resulting, and you can see it very directly on the price, with movements up and down. So it's very hard to pinpoint, but I think I'd go with bearish more than bullish, but that's an opinion. If I just look at the price, and you can see I already have my clear entries, clear exits well located, then you can see at least I have a pattern that I'm relying on as I'm trading, rather than my opinion, which I've decided to shelf for a bit. Next, I look at Euro Yen. So the Yen has been having easy monetary policy again, like the UK and like any other country, and the Yen has been very weak relative to any other currency. So the last time we had Euro Yen trading at 145, we got a rejection, sending markets slower to bounce off the third time. We've now gotten a second move towards 145. The question is, shall we see a break? If you are to go by the weekly chart, the last week we had a very good bullish close, taking markets to 145. That means if we close above 145, I wouldn't be surprised by a move to 150, which is the next major level, major price level. If I was to just go by this pattern formation, you can see there is a lot that calls for 150. But we need a clear close above 145 for us to bet on the move towards 150. And I think on the way to 150, we have to watch what will happen at 147.5, which is the next major level on this market. So if you go down to the 4-hour chart, we sort of have a magnet trade here. So I think we could see a correction to 143.75 maybe in the beginning days of the week or in the early days of the week. If markets come back, bounce off this trend line, we could then see a continuation back to 146.25 and probably 147. Today, if we get a close above 145, we could see 146.25, 147.5 before we see this collapse to the downside. So it's a question of mix of two directions. It's just a question of if and then statements. For me, if it breaks 145, I'll be looking for 146.25 and 147.5. If it comes to the downside, I'll be watching what will be happening at 143.75 and the trend line. That's what I'm watching on this market. Finally, I will look at Bitcoin. Bitcoin has been sort of in a consolidation now for quite some time. I think since June, this market has done pretty much nothing other than move between 20 and 25,000. So this was the last time we came to this level, 18,750, around those levels. We moved to 25, had a steep collapse. It came back to 22.5, had a steep collapse. Then it came back to 20. We've struggled really to go above 20. Now I was looking for a move to 17.5, but clearly breaking this level has been quite a hassle, of which I think if we take out this level, you could easily see 15,000, 10,000 levels. On this market, the catalyst is what I'm not seeing. The catalyst for that break, I can't clearly see it on this market yet. So right now, I don't have any bias or any opinion on where this market is going. At least I'm bearish, unless we break above 20,000. But a clear entry, a clear exit, clear timing, not for now. I think I'd want a break of this 18,750 for me to commit to the downside, which we have not gotten. So next I look at the dollar. I think the dollar has some interesting move coming relative to what many people expect. I'm a trend follower. I don't bet against the trend. Many people believe in selling the strongest market and buying the weakest. I tend to belong to the different school of thought, which is buying the strongest and selling the weakest. In line with that, I think the dollar has been quite strong. And since we buy the strongest, I'm still looking for the dollar to keep moving higher. I think the dollar could move to 115, 120 in the coming future. On the daily chart last week, we had some moves up and down, which looked sort of confusing. But I think Friday's close is quite suggestive of bullish momentum. And I think we're likely to see 115, 116.25 and probably 117.5 on the way higher. So I'm still very bullish on the dollar. I expect this week for the dollar to continue moving higher. I think strength will come into this market, and I think the first signal that we're going to create a new high will be the break of this 113.75. Hence my short bias on the pound, because remember, pairs are traded relatively. Next, I look at the 10-year yields. I think many people don't understand what the 10-year yield does. So what the 10-year yield does, it clearly tells you what's expected of the Fed when it comes to interest rates, and markets are always ahead of economic reality. That means when the Fed's at 3.2 to 3.5, you can see the markets are at 4%. When they move to 4%, I'm sure markets will move to 4.5. In line with that, you can see markets already pricing a move to the upside. I think there's a high chance rates will go to 4.2, 4.5 range, and markets are pricing in that move. So this week I'm expecting a move to 4.25 in line with the hawkish tone from the Feds. So if we close above 4, I think we will easily visit 4.25, and that's the move I'm looking for this week on the yield curve. So that's my sentiment on the market, both technically and fundamentally. I've tried to share why I think different things will happen and how I've positioned myself to benefit from those different moves. So it's just a question of being patient enough to wait for the markets to move and then positioning yourself in the best way possible. So again, like I've said, it could get to the afternoon and I could change my mind completely on what is likely to happen and in turn reverse my positions. That's why we always say these are not signals, these are just ideas on where the market is going and what you should watch out for when you're trading. But it's not really clearly a template for you to execute your positions in and out or to think about coming in and out of the markets. I think you are at a better chance if you have your own system and your own method. Fundamentally, no data releases this week unless the RBA meetings, which will be tomorrow. But also for that, I think it's just the minutes. It's not the decision, so not much that is coming in this week from a fundamental perspective. Maybe geopolitics, which is something we can't put a date on. We just have to wait. So let's wait for the UK Prime Minister to speak, see what he does, see how the pound will behave and close today. Let's wait for New York session, see how markets close for the day, and then you can be able to know how to position ourselves for the week, at least for swing traders. For those who day trade, at least you'll know your fate, whether it's a losing day or a winning day. So with all those things said, I think I'll catch up with you guys on the next technical breakdown that I'll be doing. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.